Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have back with us Christina Lael, who's the tax attorney with Freedom Tax Plans, and we'll be talking about how business owners can decrease taxes without spending more money. Christina, welcome back to the program.
Thank you. Thank you so much for having me back. I'm excited to talk to you again.
Yeah, you're welcome. And when we talked before, it was like, ooh, you've got some unique things that you talk about, how you serve your clients. And this is such an interesting topic because I think business owners are always watching for, that shoebox full of receipts, cliche shoebox full of receipts. So it's like, how can we get more receipts in there to write off on your taxes to decrease the taxes? But oh, by the way, you don't have to spend any more money. And it's like, wait a minute here. You have to spend money to get an expense to then be able to write it off. But now you are teaching your clients how to decrease your taxes without spending more money. So get us started with how you do that.
Sure. Yes. So I teach my business owners to basically live a tax deductible life because there's so many things in the tax code related to how business owners can save money in taxes and increase their expenses without necessarily spending more money. So some business owners may be familiar with saving taxes by contributing to a retirement account, where they have to contribute, $5,000 to save maybe $1,000 or $2,000, or their accountant tells them to, go buy a bunch of equipment that you need, or buy a $75,000 car to save maybe $15,000, $20,000 in taxes. So you can see in these examples that you're actually spending more money than you're actually saving in taxes, which is one way to look at it, but that's more of deferring taxes. So what I do is actually help people prevent them from losing thousands, tens of thousands of dollars every year unnecessarily to taxes because they're paying too much in taxes. And so what I mean by that, Mike, for example, there is a very specific secret way that many business owners are already using to save money in taxes by just correctly renting their home out to their business. There's a very specific way that they can do that. And when done correctly, the business can pay them money for the use or the rental of their home, but they don't have to pay taxes on the income that they receive at the individual level.
And so you didn't lay out money. To your point a second ago, in that scenario, the business owner isn't laying out money to get a tax deduction. This is in the course of your living life, business and personal life, we can do this thing, which then is going to generate some expenses to put down on your taxes. But yet you didn't generate or you didn't lay out any money.
Right, exactly. And it's a great way, Mike, to pull money out of your business tax-free, which is my favorite tax rate of 0%.
Yeah.
And there are specific ways that you can do that to save money in taxes without outlaying more money.
So in that example, we might not want to get into the weeds of exactly how to do it because that's how you train your people to do it. But conceptually, it makes me think of like the home office write-off, and you can write off X number of percent. But then I've also heard that, well, if you do that, then that impacts negatively potentially down the road if you sell the house. But I don't think you're talking about that. It's just a really unique way of generating that as a write-off for your business, right?
That is correct. And people, yes, and you are absolutely correct, Mike. So, and people can still do the home office deduction if they would like to. One, it's very limited to what you can do. It can be a red flag for the IRS. Definitely, there have been some audits just because people take the home office deduction. Not so much now because the IRS is so far behind and in such a mess, but it has been in the past. And you're right, you have to pay that back when you do sell your house.
Yeah, so
but with this strategy, with
it's
the
totally
home
different
rental, it's better, it's different. It's an improved way to take a deduction without having to outlay any more money, and you avoid that audit risk, and you avoid having to pay it back when you sell your house. And you don't necessarily have to even own a home to put this into practice. You may just be renting a home, and that's fine too. You can still use this strategy. You may not even be particularly working from your home 14 days of the week, or no, right now, well, I don't really use my home, so many days a year. Well, there's a way that you can use your home very easily.
So let's talk about that in again, conceptually, because I don't want to, we don't want to give away the secret, but conceptually, if you are, let's say you are working from home, well, 14 days per year, well, I work from home every day for the year. So now if the number is 14, like, okay, you don't have to pay taxes up to 14. And now all of a sudden, magically, you've got 14 days on this write-off on this expense. Isn't the IRS kind of going, okay, come on? Maybe that's not a total red flag, but they're like, okay, are you really using it for business purposes? Because, we say you can have up to 14 and lo and behold, you magically have 14. Is there anything with this exact strategy that would make the IRS kind of look at it sideways and go, well, let's look a little deeper?
No, not at all. The thing with the IRS and with the tax code, it's about how it's just following the rules and the regulation. And if you have done it correctly, which is what, I teach my clients to do, and we do a lot of this for them as well. No, they have never, looked at it sideways, or nor can they. I mean, it's all about,
because it's in their code. They've got to allow it.
Right. It's right there in the code.
Yeah.
I mean, if you follow the code,
yeah,
you're able to take that deduction.
I guess it's like, let's think about, the classic charitable deduction. You can deduct, money, and if you do it the right way, do you have to feel bad that you put that on your taxes if you actually did and you have front and back of the check to prove it? No, because that's in the tax code. So there's areas, what you're teaching your clients to do is you're uncovering these areas that are buried in 70,000+ pages in the tax code, and you're going, here's some things bubbling up to the top that a lot of business owners don't know about, and here's one of them, and here's the way to do it.
Mm-hmm. Yeah, and there are many savvy business owners that are taking these deductions and helping prevent them from losing so much money in taxes every year. Who do, have their own tax attorneys. So I'm working hard to get it out to the rest of the business owners who can use this and don't necessarily, have their own tax attorney in their back pocket, because there are so many ways to reduce your taxes and to stop losing so much money in unnecessary taxes every year that you could keep in your bank account, that you can keep at the end of the year. I'm so passionate about this because, one, of course, it helps me and in my business. When
you're doing it.
All of this in law school, I'm like, this is fantastic. Look how much money I have compared to, the W-2 job that I had at the time that was taking so much money in taxes out. Having your own business really reduced the taxes and helped me save more money. And then my clients as well, they're actually have more money at the end of the year in their bank account so that they can buy their dream home. They can go on that dream vacation. They can contribute to their, kids' education. They can fund an earlier retirement. I mean, it makes a huge, significant difference in their lives. So that's why I'm so passionate about it.
So we talked about the home one, and that's neat because that kind of puts a little curiosity there. Like, ooh, well, typically we've heard it done this way, but there's a different way to do it. Mm-hmm. What's another example? Because I want to focus in on this. Getting more expenses without an outlay of money. And I've heard someone, I interviewed a financial planner a few months ago that said he had a client that was in agriculture, and they bought a brand new combine for the purpose of tax deduction. And it was something like, I don't know, $275,000. And he kept it in the barn because he liked his other combine better. And the guy goes, well, why you keep it in the barn? Why are you using the old one? He goes, I like the old one better, but I got a tax write-off for this. But you spent $275,000. You didn't get $275,000 of benefit. So when you think of it the way that you're talking about, why did he have to lay out $275,000 just to get a smaller percentage of that as a write-off, especially since he was using the old one anyway?
Yeah. Oh my gosh. That just breaks my heart.
I know.
That just makes me gag a little bit. Because yeah, that's, oh my gosh, there's so much.
Because
better
that's
ways.
the cliche thing.
He spent
That's the
way
cliche
more
thing
money.
that people think, oh, it's at the end of the year. Let me lay out a bunch of money to buy whatever, a computer or a car or combine or whatever it is, because I need the tax write-off. Well, in my opinion, now this is probably contrarian, but when I years ago, I worked toward paying off my house. And I know a lot of advisors will say, oh, that's not great because you lose the tax deduction. But in reality, you would pay, as an example, let's say you use $1,000 as a mortgage payment. You're paying $1,000 to get the $2,500 or $250 that you can get in tax break, because it's not dollar for dollar. So why not eliminate the payment in the first place? So talk a little bit about, finding or not feeling forced to find expenses throughout the year so that you can spend money on only so that you can put it on a line item as an expense. Maybe you don't need to spend it in the first place, and find these expenses where you're already flowing money through your business.
Right. Yeah. Oh, yeah. And that, you speaking right to my heart, Mike, because I remember talking to my stepdad, and same thing. He was like, I don't know if I should pay off our home. I'm like, Mike, you are paying $1 to save 25 cents at the most.
Yep.
And so he finally got that, and then so they paid off their house. So that was good. Oh yeah, there's so many different things. There's a way to correct, and again, this is all about with the IRS, all about the tax code, doing it correctly, in which we very easily show our clients how to do it. And it's not difficult; it's just doing it correctly. How to write off vacations if they have children, how to hire their children so that they get the deduction in their business and fund their children's account, and then use that money to fund like a 529 plan, or to pay for their college, or to pay for extracurricular activities, or to pay for their daycare or a nanny, or to save, pay for a car. So now you're getting the deduction. And again, there's a very easy, efficient way to do that correctly, so that the child never, has to pay taxes on that in certain situations, and typically doesn't even have to file a tax return. And when done correctly, you can even start funding your child's Roth IRA at a very young age, and really set them up for just such an advantage with that, because with the Roth IRA, you can just use that for buying your first house or funding education. And if you don't have children, like I don't have children, but I do this with my niece and nephew to help pay for their private schooling. So I get the deduction. They don't pay taxes on that money, and then they can use that money to pay for their education. So, things like that, how to correctly write off your vehicle, how to correctly deduct every medical expense, including supplements or massages, or sometimes, fertility treatments. I mean, there's so many, alternative treatments that people are going towards that they have to pay out of pocket for. Well, there's a very specific way to deduct that 100% from in your business. So just things like that, things that you're already doing, you're already, spending this money in your personal daily life, and setting up your business correctly and these strategies correctly, which is what we do, so that now you can get the tax deduction. Because if you don't set up these things, as you know, Mike, I mean, businesses can pay so much in taxes, and it's just going up. And you want that, even if you have a great year and you do have the money to pay the taxes. What if you don't have a great year? Or wouldn't you rather spend that money to buy your dream home, or to fund an earlier retirement, or so many other things that you could do with that cold hard cash that you would have, every year?
Well, I think the big thing to keep in mind, it reminds me what you're saying here of the old Ben Franklin quote, "A penny saved is a penny earned." But in reality, probably a penny saved is a penny and a half earned, because if you earn a penny, you got to pay taxes on that penny. So really to get, you know what I'm saying?
Right.
So
Yeah.
like, for instance, if you can use what you're already doing Like you hear these companies that say, "Oh, hey, we're going to come in and audit your, credit card statement, your long distance bill, your all of these things you're already paying in your business, and typically we're going to find mistakes. We're going to find where they've overbilled something or another, and when we find that, we're going to get all that money back for you, and then we're just going to charge you 30%." You're like, "I get 70% of something that I didn't even know I've got?" Of course. And that's what you're talking about here is let's analyze what you're already doing in your business, money that's flowing in and out, and then let's just kind of capitalize on what's already happening, not create more outflow. And that's a big, big aha when people can realize that.
Mm-hmm. Yes, that's the big difference between tax planning and tax deferral.
Yeah.
And that what I do is tax planning. And that's a great analogy. Thank you, Mike. I'm going to use that.
You can take it. Awesome. Okay, so let's think about this. People hear this and they're like, okay, that sounds all fine, but it's too good to be true, and it wouldn't work for me, or it's going to create the red flag for the audit. Well, you've already covered the audit question because this is all in the tax code. You're a tax attorney. You're pointing this out. But what do you say to people that say it just sounds too good to be true and it probably won't work for me?
Well, then you should watch my free webinars.
Hey, there you go.
Because we work with hundreds and hundreds of business owners, attorneys, doctors, high net worth, individuals. And they thought the same thing too, before they started working with me, being a tax attorney. And then they saw the difference in the amount of money in taxes that they saved every year working with us. And we've even gone through audits, with lots of our clients, and they've passed, every one, because our clients rarely get audited. But when they do randomly, we have everything created for them, all the strategies so well implemented that they, pass every time. So that is the trick, is getting with a tax attorney. That's very different from a CPA or an accounting firm or an accountant or an enrolled agent. A tax attorney that focuses on how to save you money in taxes correctly.
Yes, I think that is the big thing, is you're not trying to find, ways to, get around and circumvent and really create smoke screens. You're just kind of, it's almost like you've got this printed out 70,000 page tax code and you put it on the desk, and then you just start putting little yellow sticky, tabs in here, there, and the other place, and going, okay, let's flip over to this. Okay, see right there in the tax code? Here's all I got to do to take advantage of that one. And people are like, what? I had no clue.
Right. And what do you think? I mean, you hear it in the media all the time that the top 1% in America only pay like 12 to 15% in taxes. And the big businesses, they don't pay any taxes. I mean, these people have tax attorneys in implementing these kinds of strategies. So it absolutely can be done very, very easily and effectively.
So you mentioned your webinar. Let's now talk about, if someone is interested in hearing what we have been talking about here, going, okay, I want to learn more. I'm going to watch that free webinar. But what's the program that you have that works with people to help identify these opportunities? Talk a little bit about that solution.
Yes, thank you, Mike. So I created one-of-a-kind program. There's nothing else like it on the market, called Freedom Tax Plans, because I got tired of having to I got very, very busy, and I still work one-on-one with people, but I was having to turn a lot of business away because I can only do so much. So what I did is I created a program, one of a kind, that not only shows business owners how to save money in taxes, but implements the strategies for them. And that's what really makes this such a powerful program. So it's at freedomtaxplans.com. You can register for my a couple of free webinars to find out more about it, or just go ahead and purchase it, because right now it is at a ridiculously low price. It will go up soon in the future, but it's very priced ridiculously low right now. And with this program, it's something that you sign up for, that you just watch a few brief videos, you answer some questions, and then it implements all these strategies for you and tells you which strategies apply to your situation, any forms, documents, or easy instructions for each strategy and how to implement them for yourself. And we have email support and a free weekly Q&A. So that is a program that any business owner can take advantage of, and that so many business owners already are, and saving thousands of dollars in taxes. And any business owner can take advantage of it and save thousands of dollars in taxes. And I even give 110% guarantee. So even the first year that you use it, if you don't save at least the cost of the program in taxes, just the very first year, that will give you 110% of your money back. That's how much I believe in it and how much it's working for people. And it's just making such a difference in so many business owners' lives and businesses.
Well, it's really rare these days that someone will stand behind their product to go, okay, we guarantee it, but then to guarantee it at 110%, that's pretty bold. And I love that. And I love simplicity, and I love support that comes along with that. So I think that is just spectacular. So, Christina, thank you so much for coming on today. It was really eye-opening to hear some of these opportunities. And I encourage anyone that's interested in taking advantage of this to take a look at the program right on your website. I'll have that hot linked in the show notes as well.
All right. Thank you so much, Mike. It's been such a pleasure.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.